For months now, we've been expecting a blow off top scenario. It's been 10 months and Bitcoin is at the same price as it was at the peak in December of 2024. So I've got a few questions I want to attempt to answer in today's video, along with going through an update from last week's video. Huge numbers on that one there, nearly 70,000 views, which means there is a lot of people watching Bitcoin and crypto to see what is going on right now. So I've got a few things which I think are showing signs of a breakdown, so the breaking of the cycle, a few signals or indicators, if you will, that haven't broken down and there's still the possibility of further upside, and a few of them which are on the border. So let's have a look at where we sit right now as the weekly bar has closed, and it has closed in a precarious position, but still slightly on the bullish edge. Stick with me. If you haven't already, hit the like button, subscribe to the channel so you can see the daily updates here. So let's start with some of the bad news, and then I'll get into some of the good news. There's going to be a little bit of information either side of that good and bad news because of the assets that I want to cover in today's video. But I'll start with a little bit of the bad here to answer, or at least pose the thoughts here around what are the signs for the end, and compare those to previous cycles as well, along with how these signs have worked in all other markets, not just Bitcoin, because I don't want to use signals that only work in Bitcoin, because eventually those signals don't work. It's like models. Some models are good until they're not. And so you don't want to use these signals that people had been creating for Bitcoin throughout the last couple of cycles, because eventually they're just not going to work in maybe the current cycle or future cycles. You've got a lot of those things that they look at in regards to on-chain analysis and the halving cycle and MVRV and all these sorts of things. And they've only been proven to work over a couple of cycles. And so if you don't have enough backtesting on those, especially tried and tested across multiple markets, then personally, I don't want to use those type of signals. I want to use signals that are tested across many markets, because then we have more data points and more back testing to work from. So signs, some of the signs for the end, I'm going to start with the volume here, because the volume has been very, very helpful for breakout points in previous moves, especially in this cycle. But yeah, even in the earlier cycles, it's been really, really helpful. And I'll just keep it high level, so a little more broad here. You can see the volume on the initial breakout into a new all-time high. So this is the accumulation. We're on the Coinbase chart. A lot of people use Coinbase in the US and around the globe, predominantly in the US, of course. So that's a good area to get the data from. Some other exchanges were big time in 2017, which are no longer being used, so that data is not as helpful. And other charts are not as helpful, like sometimes Binance, because they had promotions and they were gathering all the volume back at the beginning of this cycle. They had a lot of promos on at that time, and people were all going into Binance, especially with the FTX collapse. And then they left Binance because it basically got blacklisted in many countries. And so it's just a little bit harder to read that volume. Now, you could use another chart like Kraken, or more importantly like crypto or the index, which combines a lot of these. And so you're going to get a similar read here to what we've got with Coinbase. So with that background, looking at the volume, essentially a breakout on strong volume is always a good thing. A breakdown on strong volume is good for the bears, but not necessarily for the bulls. And you can see it happens many, many times over and over again. You get the breakdowns, the volume starts to increase, and then you get these capitulation bars. It can hold the market up for a bit, and then it collapses again. That's for a bear market. But we're looking at this for a bull market, and over the last 10 to 11 months, you can go back to November 24, we're currently October 25, the volume overall, you can see in this blue line, the average here has been continuing to decline. So this is over a much longer time frame than what happened in 2021. You can see we had this huge volume coming into the peaks of first half of 2021, and then the volume started to decline for the second half of 2021, yet we did get a new all-time high price. So there was another exit opportunity, if you will, through that period. Then you started to see the volume increase, and it's a little bit nuanced here that through that period of the decline, and that was a very sharp decline in November and early part of December, but the volume had increased, and in particular, this bar here was higher than anything you'd seen since the low of May and June of 2021. So basically 6 months later, you started to see volume increase, and it was increasing on the way down. So I could go back and look at many, many examples of this, but if you want to take my word, great. If not, go do the back testing. We have been seeing the volume decline. The largest volume we saw was February into that March top. So a lot of excitement there. That could be the extreme time that everyone was waiting for, or they, a lot of earlier buyers got in there and there was a lot of excitement. And then there was a second time with extreme volume, and that was through the Trump election. Inauguration was over here with higher volume as well. And that volume basically broke us out to a new all-time high. And then as you watch into that second top, only went slightly higher. The volume was not as strong as the first time that it broke out. And then we started to decline, increase volume on the breakdown, and then the low got some heavier volume again, which was able to push us higher. Overall, volume has been going down, and right now, these last 2 weeks, we just had the weekly close, has shown an increase in volume to the downside. And so we got an increase in volume at the high there as well for July. That was higher than pretty much everything on that move up into that July top. And you can see from the previous cycles as well, as it started to get into the highs, big volume to sell off, more big volume on the sell off. And then of course that May bar happened and there was big volume on the sell off. The breakdown bar in mid-May, look at that, bigger than everything there and second only to the other sell off. You're starting to see quite a lot of selling happening around those highs. Going back to 2017, big volume into the peak. And then this week, that went into the new all-time high was lower than the prior week. So not as much buying happening, smaller range bar as well. So again, not as much buying happening, but not as much selling yet. Then the next week came and basically wiped out everything. Now, you could be forgiven trying to buy up that dip into the next high, but then this bar happened and the volume was just absolutely dead on the buying side. So in each case, as we get to a lower top from the all-time high, or as in this case here, that's basically the end of the cycle again. The volume had dried up. It went marginally higher, but they're not the gains that people are here for. You know, the people, all of them, myself, maybe you're not, but myself, I'm here for much bigger gains than that. I would expect breakout volume that's going to take out the tops and then the price to hold above those tops. Right now, we're not necessarily seeing that, and we're seeing the opposite. We're seeing a bigger breakdown of volume while the price is breaking down. Now, that's not to say that the cycle is over, because we haven't seen anything extreme yet. We're just beginning to see much larger volume on these declines. But the good news, and I'll flip to the good news here, well, some of the good news, is that the price is still holding above 50%. Now, if you're more familiar with the moving averages, like the 50-week and the 200-week, the price still has not broken down from either of those levels. And so the 50% act like that, but at a closer price point. And from my analysis, I can use those for my trading to place stops and entry points that keep me in positions or get me out of positions as well. So in terms of 50%, we haven't broken down from that. That's sitting around 100, and the previous swing low was at 98. So in terms of price, it's still holding up for the time being, and it's still above the top back from December 2024. So that was where we had that huge volume up, volume dropped off, weaker volume into that next high, which then caused a collapse in price. So we're kind of teetering on the edge there and starting to lean more towards that bearish side when it comes to the volume. But fortunately, the price is still holding up for now. I'll come back to price because I have a few extra 50% levels to cover. But in terms of, is this crypto cycle over? No, not in the case of the price ranges yet, coming into those 50%. In terms of the volume, I think now is the time to be very cautious, especially with these last 2 weeks. We did not have this information 2 weeks ago because those two bars were not there. We had an increase in volume on the final week of September, early October, and it closed into new all-time highs. And then the following week went slightly higher, just like what happened in 2021. So we had the October move into that high, and then those next couple of weeks, they went slightly higher, but then unfortunately collapsed below those levels. What are the signs for the end and what still looks like we're on track? Let's continue with the signs for the end, because at the end of the day, there is no bell that rings at the top. We're just trying to put the pieces of the puzzle together, and once or more of those pieces fit, well, then the picture becomes a little clearer. Like the video if you enjoyed that analogy. I came up with it on the spot. So the other piece of the puzzle here, in my opinion, is the Microstrategy chart. It has continued to fall, continued to close down, and now is at its lowest weekly close in the last 6 months. So you can see the close that happened on Friday, $290. It's on 50% now of the entire cycle. So there's its cycle low in December 22, cycle top in November 24. It's been putting in lower highs almost like throughout this entire period, when Bitcoin had been putting in higher highs, and has broken down from some of the shorter term 50% and is now sitting on the entire ranges 50%, which is $278. The weekly close $290. So a breakdown of 278, not great signs, and then basically the final lows here at $233-ish. That is going to be one of the final nails in the coffin for MicroStrategy and potentially BTC as well. Like you could see from the previous cycle, MicroStrategy top, Bitcoin putting in new all-time highs in March and April and October and November. Meanwhile, MicroStrategy lower highs through this period, failing at 50% of the range, and then breaking down from the cycles 50% range at $70 and continued down there, 80, 90 odd percent from that high in February. There is the top, roughly 90%, cycle low, basically dead on there at 90%. It currently sits down from the highs of back in November, down 46%. So a 90% correction can hit somewhere around $60. And I hear people now saying it's not possible this time, yada, yada. Sure. But I think there's still a possibility that it will break down from 240, 230. So you'll get under a 60% correction from the high, and probably a breakdown of somewhere around these lows, probably somewhere underneath a 70 to 80% correction from the highs for MicroStrategy. Ideally, this isn't the end of the cycle here, and even if we find a low and Bitcoin begins to bounce, I think MicroStrategy will probably still put in some sort of lower high from this point. I think that cycle top is now in for MicroStrategy. What is the best and worst case scenarios for Bitcoin? Well, I'm glad you asked. Here is our pathway forward. Now, I'll keep it as simple as possible because this can drag on to have a look out roughly 4 years from this point. The best case scenario, we find lows for Bitcoin above 98,000. That is the swing low and the 50% at 100. So call it 98K. And we basically rally into a nice new all-time high. Lots of volume comes in. Everything is fantastic and people are making all the money in the world. And then we find that top sometime around Q4, or I think the first 2 weeks of January. I'd extend Q4 out into that period based on timeframes that we've looked at before. So don't worry about where this comes in. That's showing September and prices. It doesn't matter. Now that's the best case. And of course we go on a 12-month decline to somewhere at the end of 2026. And then we rally once again, getting into that early part of the next bull cycle. 2028 is going to be the halving. And so you get this move higher, people front run the halving yet again, and then it all declines, so on and so forth. Now, I don't think that's going to happen this time because of our 18-year cycle. I think there is going to be a longer drawn out correction next time. Therefore, the bear market that we see after this top, if in fact maybe we have already topped, but whatever bear market happens here, I think it's going to be a multi-year bear market. Now, of course, we could see some minor rallies here, but I don't think it's going to be like what we've seen in the past where you get these big multiples from those lows. So I think it's either that the best case, low in, run higher, have your 12 or so month correction and then a bit of a weaker bounce. It might not feel weak at the time, but I think that's what will occur there. Maybe you'll miss the all-time high and then it will just decline for the next couple of years until you get into the next cycle. That's where you'll be looking for the low, roughly 2030, and then run up from that point. Otherwise, the best worst case scenario, so best worst, would be that it basically declines from this point and we put in a top, we do that decline into 2026, and then things start to rally in 2027, potentially into a lower high, and then you go on that multi-year bear market. Because you could get into a worst case scenario where this is the top, and then basically it's a decline for many, many years, and you get a much, much lower high form, and then it continues to decline into that 2030 period. Yes, you get the halving in 2028. Maybe there's a bit of a bounce there. Everything's declining because, well, we sort of hit that peak for the stock markets next year or 2027. We've hit the peak for the US real estate and economic cycle. And through that period, you're still seeing maybe things like gold and silver continuing to increase. Now, because we believe there is a multi-year bear market approaching for almost all asset classes, it doesn't mean we're going to stop trading and investing. And if you're at the point with your portfolio, you want to take it more seriously and learn how to rotate assets through multiple different asset classes through these periods. TIA Premium, check that out. Link in the video description. We are closing this. We're capping it very soon. You'll have about 24 hours from this video if you want to join us there before we cap Premium. We just want to keep things nice and tight, less noise as we go into the peak and the correction. So if that has interested you over the years, you've been watching potentially even weeks or months, now is that time before we close it off. History has shown there is not much time left in any cycle once we come out of October. Ideally, coming out of October is to the upside, so we get more strength for the end of the move into Q4. The historic data, we have 14 Octobers on this chart. The amount of those Octobers that have lasted more than 3 months, or moves out of October that have lasted more than 3 months, has only been 4. The other 10 times have been less than 3 months. And of those, 3 of those have led into cycle tops, and they've been a maximum of 2 months. That was 2017. 2021, you had a month, and then it was over. 2013, you had 1 month, and then it was over as well. So end of cycle, only 1 to 2 months from October. That's providing we actually get out of this in the green as well. So ideally, we are able to hold in here and then turn around to put in a final top. But all of these are suggesting to me that we are getting very close to the end. I'm not confident enough to call that the cycle is over. I have been talking about bigger moves to the upside for quite some time. But if the signs are now turning, well, I've got to be an idiot to keep going with bigger and bigger targets to the upside. The benefit, in my opinion, of now is that there hasn't been that much damage done. The price is still the same as it was back in May, still the same as it was back in December. So for 10 months, it's basically the same thing. So I think it's really, really important to either have that ready in your plans to either get out of the market at wherever you sit, be able to hold in there, or get back in if the market does start to rally pretty hard into this end of the cycle. That is going to be the trickiest part now towards the end of the cycle. And I think gold is a prime example of how that works out. You can see we had a consolidation before that breakout. Not to say that gold is at the end of the cycle, but we do have some signs to suggest that gold has put in a local top. If you weren't aware, there have been lineups around the world to be buying gold, and I'll explain why this might be a benefit to Bitcoin in just a sec. But we had lineups in Sydney, lineups in Japan, lineups in Singapore, lineups in Vietnam, lineups in New York City. And this was all thanks to Alex posted this up here, just getting it off Grok. But you can see all the photos here of people lining up, and it was around the week before the top and the week of the top. And so it's just absolutely mental when these signs occur around these peaks. Now, in terms of Bitcoin and the gold cycle, it doesn't necessarily have to catch up to gold. It's like Bitcoin has gone on a run, gold consolidates, and then you see gold go on a run while Bitcoin pulls back. So it's not necessarily one catching up to the other. You kind of have these periods where the market is more interested in Bitcoin, it's running up, and gold is consolidating at that time, then Bitcoin consolidates or even distributes and starts to pull back. Meanwhile, gold is going up, and that's sort of rinsing and repeating throughout the cycle as well. So if this is the case where gold is just going to have its pullback, consolidate, potentially we do get this final run for Bitcoin to hopefully put in that next high price, give us a bit of a going out song, and then we can all live happily ever after from that point. Now, the other piece that we've been watching is, of course, the US stock market. This period looking pretty choppy. It has been day after day following the 5-year pattern pretty well on track. You've got tops coming in to the same day counts. You've got pullbacks almost to the same day count. You've got a bit of a rally and a chop, rally and a chop, pullback into the exact time count, and rinse and repeat, right? Rally higher, consolidation for a number of days, consolidation for a number of days, it's choppy, and then this stage is what we're coming up to next. So potentially we're going into a bit of a rally and pullbacks, another higher low, and then things get a bit clearer. This is the important part, the time frame from today's date to that pullback and potentially the move higher out of that point. Let's take a quick look. Here is the time count to get to that breakout. In between that, rally, pullback, consolidation, bigger pullback, a low, and then the rally higher. Look at the day count. You're sitting roughly around 5 weeks, 35 days in total. That's roughly 5 weeks away, which is pretty difficult to sit through in any market. Now that's end of November, and then things start to get a little bit cleaner. People will start talking about a Christmas rally, so on and so forth. But if it is going to follow similar to what happened 5 years ago after the COVID collapse, then that's what we have to look forward here for the S&P 500, which doesn't make life any easier for Bitcoin either through that particular period. Now, the other chart I've got here is gold, Bitcoin versus gold. It's potentially bottomed here. So this is another maybe good sign for BTC. You've got a double bottom. Doesn't mean that we're going to shoot up to new all-time highs, but at least there is some sort of support coming in here. Gold has also come into a peak. Short term, potentially, maybe this runs for 6 to 12 months like it has done before, in the cycle leading into the top. Look at this pullback here. March 2008 to November 2008, roughly about 30 odd %, and then it rallied again. And you also had May 2006, also another pullback. Let's have a look at these corrections that we've got. 25%, and the 2008 correction was, there it is, 32 to 35%. So you got this 25 to 35% potential. Some of the smaller corrections are 10 to 20%. So we're going to be watching all of those figures there. 25% takes you to the lows here for gold. And the point being for the Bitcoin gold chart is that if gold is putting in this local top and Bitcoin is putting in a short-term local bottom, then we may see this rally here as well. And that could be good signs there for the interest moving from gold back into BTC. What about alt season? Well, first we need to discuss USDT dominance. And this is not working out the way the bulls want to see it go. We have continued to get bigger and bigger volume on this rise. It has also been closing above resistance levels. So this is on the weekly chart and of course on the daily, but on the weekly, we do have 1 week above all of the resistance levels right now on increased volume, mind you, which is basically what happened in the prior cycle as well. Look at this volume increase at the lows and then break higher. So USDT dominance continued to rise. Therefore, these crypto and Bitcoin markets continued to fall at that time. And then you had a drop into a higher low, which is bullish for USDT dominance, but bearish for the crypto markets. Volume increased again, and then it broke higher. So that was basically the bear market. Bull market for USDT, bear market for Bitcoin and cryptos. Unfortunately, we have that again. Big volume coming in at 3.7, 3.8. Then we had big volume again coming in around 4.1, 4.2. Look at that volume down here, and then the breaks higher. Now we have seen it a few times before, like I pointed out, where there was a break above the downtrend for a week and then a snapback. Break above and snapbacks right through here as well. So above that line, snapback, above the line, snapback, above the line, snapback. We need to see this week a snapback back underneath, at the very least, 4.9%, ideally below 4.7%, and the very best case scenario below 4.6%. I think if that's not going to happen, we really need to reassess where everything sits right now. And at least it's still early days, in my opinion, of course. Now, Ethereum isn't looking as bad sitting in this position. It is underneath 4,100, all those previous tops. So again, if we do get that snapback this week, so this is going back to what can be the alt season, what's the best case scenario. We haven't got any of those complete breakdowns yet. We see closes on the weekly chart above $4,100 for ETH, ideally above 4,200. Now it's not far off that now at 39.46. Nice snapback, closes above that level. Looks like things are looking pretty sound again. For Solana, it has continued to fall here, and we have multiple 50% to watch. The macro bull, or the entire bull market, still above that at 151. So that's the 50% level. It's sitting at 185 now. So let's turn that one off. Have a look at the bull market correction. It's underneath that level of 195. So this week we need to see snapbacks above 195. And for the short term here, it needs to hold above 174. Ideally, the biggest one to watch here for Solana is a close above 195. XRP, that's continued to go down. It's met my 12-month targets, the lows to the highs at 12 to 13 months that I've been watching. It's back underneath the 50%. I don't know if this is going to get that extra move. Hasn't broken down yet from the $2 and had a close there, so there's still some hope. But in terms of altcoins, this has still not turned around, and the week as well has been underneath 7%. So if we are going to get that snapback, I think it needs to happen this week. This is for the stablecoins. Snap back underneath for all of the stablecoins, back underneath those resistance levels. And for alts, ETH, etc., they need to snap up. They need to close at least above. For the others chart, I would say somewhere around that 7.5 at least, ideally above 8%, way above this line here. That's at 8.3. And as I've said, for Ethereum, back above $40 to $100. Overall, I think it's too early to say that the top is in. However, there is mounting evidence to suggest that we are getting to that turning point. Now, there's never going to be a perfect time to exit the market. At the end of the day, it's entirely up to you how you like to trade the market, but I would not want to ignore some of the signs that are building up right now. And so if that means scaling out slowly, if it means waiting for the top to come in to be confirmed, whatever that means to you, and then getting out, that is entirely okay as well. If you want to see how Michael and I are trading and investing through the market cycle peaks and into the collapse, TIA Premium, that will be closing off in about 24 hours. Links in the video description. You can also get the free reports down there as well. Thanks again for your support. I'll see you guys back here at the next market update. Until then, take care and peace out.